Dan Leach back here in beautiful South Beach. We're literally like a couple of yards from the beach, and I'm here with Hans Williams, the head of ETF sales from Calamos Investment. Pretty good place to be right now, huh?
Absolutely, yeah. We're new to the industry in terms of ETFs on a relative basis. You know, the majority of our ETFs have been out for about 10 months now, but very quickly raising assets, and it's an exciting spot for sure.
Let's talk about Bitcoin, and I think that a lot of people have Bitcoin on their mind. Maybe in a good way, maybe in a bad way, but the future is here, and it's definitely Bitcoin in many different ways. I just wanted to get a perspective from you, obviously how it ties into what you're doing at Calamos Investments, but also some of these people are kind of freaked out about Bitcoin, others are super bullish and have been for a long time.
I mean, so since Bitcoin's inception, Bitcoin has, and if you look at each calendar year performance, it's been either greater than 30% or below 30%. You could be at $100,000 on Bitcoin, a spot Bitcoin, and if it drops 50% that year down to 50, you then have to go up another 100% just to get back to that starting point. So it's an asset that's now at about $2 trillion in total, and the demand is very real. And I think right now at this point in time, asset managers, wealth managers are trying to figure out how do we take this asset and inject it into portfolios, and what types of portfolios should our clients, should it be in for our clients?
Yeah, and I think that it's important that people understand that, you know, that's what you guys are here for, is to, you know, kind of get through the noise and to explain to these clients or potential clients how you can make them successful without them having to worry about all the outside stuff, right?
Yeah, I mean, so since the late 70s, you know, we really started with the convertible bond space.
Yep.
So, you know, if you look at our near 50-year history, it's been nearly 50 years of building products that inside them contain optionality. And so it's this interesting, unique marriage of the transparent, liquid, tax-efficient ETF wrapper, and then this crazy, volatile asset that for the last 10 years has done nothing but exhibit volatility on a year-to-year basis.
Well, let's talk about something that could be volatile, but also could be a little more steady, the S&P. When it comes to, you guys have a social protection suite, and where do you, obviously let people know what that's all about, but how do you see that going as well?
Yeah, so that's a really interesting suite that we offer. We've had it out for about 10 years now. We have our first one in terms of the options side of them expiring this May. So it's it's direct exposure to the S&P 500, just with an options guardrail around it. And so when we redo the options package, which occurs once a year for each of our monthly S&P products, what you can basically figure out on day one is your upside cap. So that's the upside return potential to the S&P 500. And on that day one option structure, it's 100% downside protection because of our options design.
And that's the key. I mean, you can't get much better than that right now, because the downside is what people are kind of most freaked out about right now.
Well, we're coming off the last 2 years where the S&P over the last 2 years performed about 25% per year. I think one of those years was 26. You know, so that it's been an incredible run for the S&P, but what's unique about right now, say relative to 2015, 2017, 2019, Fed funds rate isn't at zero. The Fed put what used to be is no more, and we don't see the Fed cutting to 1% anytime soon. You know, Fed funds rate is about 4.25 right now. Maybe we get a cut or two this year, but again, it's not going down to 1 or 2, where that environment would tell you to go buy risk, go buy stocks, right? So it's what, you know, when you look forward, and a lot of our clients tell us this, reasonably over the next year or two, you know, you're probably looking at mid-single digits from the S&P, maybe high if we're lucky. The way we've built our strategy with our S&P products is, you know, depending on when you're looking at, mid to high single digits on the upside, but with 0% capital at risk, right, which is a really intriguing point to be at this point in time.
You can't get much better than that. Yeah. Well, I wish we all could, you know, see into the future. We'd all be super rich if we could. Yep. But if you could do your best Stewie from Family Guy time machine reset here, and look, you know, 2, 3, 5 years ahead, where do you see things going market-wise, but also obviously with Calamos Investments? Yeah,
I take 2, 3 years ahead for sure. You know, the Fed maybe cutting and coming back. You know, the historical Fed funds rate is right around 4.5%. So we're a hair below that right now. You'd like to see inflation continue to come down. You know, CPI, Fed typically likes to see that between 1% and 2% per year. That's normal and healthy. We're above that, but the momentum is to the downside, which the Fed likes. But it's been slow. And so if you look at Fed funds futures, if you listen to the Fed, maybe you get a few cuts over the next 12 months.
Sure.
And if that continues, maybe another few cuts, maybe down to 3.5, right? So even if that happens, what do you expect? You still expect volatility, and you still expect options in terms of, you look at bond world, bonds for the first time in decades are now a viable asset class for investment. So because of that balance of opportunity, equities are a very real place to be, an important place to be. If you look ahead, you look at Bitcoin, it's an asset that's done nothing but gone up dramatically over the last 10 years, and we think that's only going to improve, especially with the current administration being a very pro-crypto administration. But then the question is, what types of solutions are you adding to portfolios, to augment that volatility and to partner with that volatility in an environment that's probably not going to see a Fed funds rate between 0 and 1% anytime soon. So the way we've structured, whether it's our Bitcoin products, whether it's our S&P or NASDAQ products, is transparency around knowing on a forward-looking basis what your upside potential is, and also on a forward-looking basis, your downside capital risk, which we basically lay out and you can actually find on our website on a daily basis, which is a really unique way of looking at risk, because historically you look at risk and you center it on beta, right? Yep. I'm going to use this because it's a 0.5 or 0.6 beta, and I hope that if the market's down 10, I'm only down 5 or 6. This is a forward-looking way of adding risk and adding a solution to a portfolio where you can now say on a forward-looking basis, because of what my clients want from a risk standpoint, this might make a lot of sense.
It's a fascinating time to be alive right now, isn't it?
Yeah, no question.
And it's a great time to be at Calamos Investments, that's for sure.
It's been a very, very exciting last 10 months, and we're very excited about the future.
Well, it's a great times ahead. Hans Williams, head of ETF sales at Calamos Investments. Thank you so much for joining me.
Appreciate it.
Fascinating talk.
Likewise. Thank you.